Hello, and welcome to Talking Development. If there's one thing people everywhere want, it's a fair chance. A chance to work, to earn, and to build better lives. Jobs are where that begins, providing dignity, purpose, and a path forward. But for too many, that chance is still out of reach. In Latin America and across sub-Saharan Africa, two regions full of energy, ideas, and drive, the opportunity gap remains wide, and quality jobs are still too few. Joining me today to unpack this challenge and how to respond to it are the World Bank's chief economists for the Latin America and Caribbean region, as well as the Africa region. Bill and Andrew, thank you so much for being here with me today.
Thanks for the invitation, Anna.
Pleasure to be here.
Both of your regions have recently released economic updates. The focus of these updates are on something very important, which is the access to jobs, and in many cases, the access to a better job. What is the challenge in your respective regions when it comes to meeting the needs for jobs by young people, the desire to work, but also how people view work as an important part and purpose of their life? Why don't I start with you, Andrew?
Thank you, Anna. For us in Africa, what gets in the way of more and better jobs is a business environment that is very costly for new firms to enter the market and for existing firms to expand, get larger, and create jobs at scale. So, for example, financing is very costly, and it's non-existent almost for new startups, right? So 80% of funding for African startups comes from outside. It could cost you 42% of per capita GDP to register a business in Africa. And this is from our Business Be Ready surveys. And then you have core infrastructure that is unreliable, that is unaffordable. And then on top of that, you have some countries where there is no peace, there's a lot of conflict, where economic activity just cannot happen, and therefore you can't create jobs. So these are some of the things that get in the way of more and better jobs in Africa.
Thank you, Andrew, and I'm going to come back to you on something. But before I do that, Bill, what about Latin America and the Caribbean region?
So LAC is a bit different from most of the rest of the world in that our populations are actually shrinking. So our challenge is not so much creating a lot more jobs as creating better jobs. And this takes us right back to how to increase productivity. Mm-hmm. And on the one hand, many of the issues that Andrew pointed out in terms of business climate, in terms of making stronger managers and entrepreneurs is key. But on the other hand, we have 30% of our firms in Latin America who say they can't expand because of lack of qualified labor. So that puts the human development agenda squarely as part of the solution as well.
Thank you so much. So, Andrew, I'm going to pivot back to you on one thing that we've really focused on in the Africa region is to invest more in what we call foundational infrastructure, which is both the hard part, if you will, the roads, the energy, the ports, the railways, the digital, but it's also the human capital side of health and education, access to nutrition, food. How do you see the role of foundational infrastructure in alleviating or in removing some of these obstacles you talk to when it comes to creating jobs? Why is it so important?
So let's take, for example, electricity, right? No business, modern businesses or economy for that matter, can run without reliable, affordable electricity, right? In Africa, most businesses don't have access to electricity. So do most households. They don't have access to electricity. And then when they have it, it is either costly or unreliable, right? So outages are very, very common, and they're very costly because we estimated that for 21 countries in Africa, outages cost maybe 5 to 14 percentage point reduction in jobs. It literally destroys jobs. And then you have businesses that do not want to enter because they think that they're not going to be competitive because there's just no electricity. Digital technologies are better, the coverage is better, but the use is difficult because it's expensive. Then you have infrastructure, which is often very unreliable and low quality. And then even if these businesses were able to expand, you have a skilled environment, an ecosystem where, foundational skills are lacking, very low enrollments in TVET or even higher education where you need a lot of technical and advanced skills in order to absorb these new technologies that are going to be useful for businesses to become productive. So the kind of investments that the World Bank is doing in terms of Mission 300 to make energy available to millions and millions of Africans, the kinds of investments we're doing in our skills environment ecosystem, both in East and West Africa, is extremely, really important in order to be able to make this situation basically get better.
Yeah, thank you. And I guess there's a reason we call it foundational infrastructure, because what you described are really foundational prerequisites, if you will.
Absolutely.
Both the access to electricity, which I think we nowadays really think about in the institution as a human right, because without it, like you say, there's so many limitations. But what's interesting, Bill, is you mentioned two things. The firms that have a hard time growing. And one key reason they have a hard time growing is that they can't access skills. Now, it just so happens that in a very different region, in a different part of the world, it's also a major impediment. Tell us, what are we doing in the World Bank Group to address this issue in Latin America and the Caribbean?
One of the important findings from the report is that even though the region shows up on standardized measurements as very high in entrepreneurship and the enthusiasm for entrepreneurship, there are two classes of entrepreneurs. There's kind of your micro firm, own account worker, which in some cases 70% of entrepreneurs who are very happy. They say 70% say they're there for opportunity, for better wages or more flexibility, but they also say they're not going to grow. The other group is what we call transformational entrepreneurs, and those are the ones who create jobs, and those are the ones who adopt technologies. And what they're facing in terms of growth is partly a question of finance, and partly a question of, as we're talking about, human capital. Now, I think the bank is doing a good job in the sense of putting primary and secondary education as key things, but we also need to be sure that the training systems are oriented towards the needs of the private sector, that we're actually putting things like the technical skills as something we're supporting in things like community colleges, which don't exist in Latin America, and ensuring that people go into STEM skills in good universities, a whole bunch of other things, but in terms of the human capital side, we need to focus there a lot.
Yeah. Thank you so much. Now, I want to ask the two of you the same question. I'm going to start this time with you, Bill, which is, I think you've made the case for the focus on jobs really well. You've also described that there's a lot of things that have to come together in order to create the environment, the ecosystem where jobs can be created. What makes you hopeful?
Andrew.
What makes me hopeful? So, two things, right? So, in the case of Africa, I think what makes me hopeful is that anytime historically we've seen this massive expansion of working age population, it has led to transformation. Whether that is in East Asia more recently, but in Europe in the past, right? So I'm hopeful that that will happen in Africa. Second thing that makes me hopeful is that African youth are demanding their governments to deliver these services. Mm-hmm. And you can see already that the word transformation has entered the political dialogue in Africa. So that's what makes me hopeful.
Very good. Bill, I'm not going to let you off the hook,
no,
so I'm coming back to you. And I know you have thoughts on this that you want to share.
No, I was just going to say, it's like Latin America continues with growth rates of around 2 to 2.5%. And that's not hopeful in the sense that I think that's been the standard for a long time. That's below Andrew's region, and it's certainly below Asia. So that's continually preoccupying. I guess on the hopeful side is the region is no longer devoting all of its energy towards macro stability. With a few cases, there's been a huge professionalization of our central banks and our ministries of finance. We did the best job in the world in terms of fighting inflation. That's good. I guess what's also good is there's kind of a consensus about what we shouldn't do to raise growth and to create jobs. Even as the region is now becoming more experimental with the kinds of interventions we need to do to get growth up. So whatever interventions, industrial policies, or whatever are undertaken will be done in a more sophisticated and careful way than in the past.
So of course, that all of this should culminate with the right instruments and support in greater private capital mobilization. So we have those three that we really want to focus on. So thank you so much. This is great. I really appreciate it. And it's wonderful to get a little bit of an insight into how each of your regions look at this issue, this very important issue of access to jobs, access to better jobs, because both of you spoke to both. And here's my take. Across Africa, Latin America, and the Caribbean, but also beyond, one thing is clear. Talent and ambition are not in short supply, but opportunity is. Too many face barriers to jobs, limited skills, hiring challenges, and business environments that don't reward initiative or risk-taking. The real question isn't whether people are ready to work. They are. It's whether countries can create the conditions for quality jobs to follow. And that's where the World Bank Group comes in, helping countries invest in the foundations of job creation. From infrastructure and human capital to policy and regulatory reforms that build business-friendly environments and attract private investment at scale. As our regional economic updates show, the time to act is now. And that is why we are working faster, smarter, and more responsibly so that we are better positioned than ever to meet this opportunity. Thank you for watching, and I'll see you next time on Talking Development.